Hello, hello, good morning or good afternoon. Welcome to another year's video stream. Today is Sunday, October 8th. It is 2:50 p.m. Eastern Time in the US. Now we got a market on Friday. I hope you have seen how you were watching the previous streams. So we have a balance here. We have a balance, a perfect balance in a market that was going to the downside, in a market that was trending lower in all time frames, the monthly, weekly, and daily. All they were trending lower. And inventory, the conditions in the upper side and the lower side were extremely weak, both of them. The upper side, the break is very mechanical. The structure in the lower side is super weak. We have multiple gaps all over the place. And the upper side have 2 gaps, and the lower side have 3 gaps. This was not a gap, and the odds for the short covering were there. They were there even from this day when the market was up here. Also liquidation or selling also were there. So it was a market that didn't have enough information to go for the kill or to have a bounce. And the action on Friday was absolutely, it's an event that happens all the time. And what is this price of traders that just for the price get caught in the action? Everything is looking bad. But we don't realize that most people don't realize this. When I say most, I mean retail. That this is when the market has this break. I guess was the ADP we have here. We have 2 distributions. The market the next day closed the distribution, meaning that if there's going to be something serious to the downside, the distribution were not going to be closed, but it closed. And not just that, it was an inside day with a no-excess low that adds to this low. So this low was exponentially weak. And then the following day just stopped very close to this low. And the upper side, we have this day that has these 2 distributions from this day. And this day has huge volume, because it was the end of the month. If you remember that all this information that we were carrying from kind of like one or 2 weeks before that, before Friday. And on top of that, the situation of the bond market is also, this is a really, there's tremendous amount of pressure that the bond market, this is the 10-year notes, the bond market is putting on stocks, and this is the 30. There was a low here from 2007, I believe, and another one here, 2008, and the 30. The market made a low here on Friday. But this hasn't correct. This low was made. There's a market low that was made in the overnight. The same rule, same guidelines that we use for the ES, for example. It's the same guidelines go for all the markets. And lately, this is the new shiny thing, right? That the market has. Bonds. Crude also was having a spectacular rally range, and once the crude oil takes this range out, there's nothing here below. Now you can see, remember the same way how we trade ES, how we see markets, right? The potential for firecracker effect here, right? This area is filled or full of lows, filled with stops here. More stops here, and there's nothing supporting the crude oil market all the way down to this range here, right? The rally, the gold is the dollar is having also. This is very, and you can see very technical rally. You can put a trend line here, for example, in this low here, and this low up here. It fits almost perfect. Right? That's all these lows. This is just crazy, you know. It's just to give us an idea who is, you know, just move it up here, move it up here. You know, it gives us an idea who is in these markets, who is doing the most things. Same goes with the gold as well. This gold is happening. Look at what happened here. Right? This is short calling. What do we have here? There's nothing here supporting the market. The gold supporting gold all the way down. Not even here, right? Maybe here. There's a range here that can have a support around the 1800. This is a big break the gold also has. But the most important, the thing that I believe the market is following is the 10-year notes here. And we check the daily. We got long liquidation. We got long liquidation here and short covering here, followed by a long liquidation again here. You know, some recovery. The curious part here is that the 10-year note and the 30 as well close. Get back inside previous day range. This is the low I was talking that was made in the overnight. And if, as we will see as well, the ES also has a low that was made in the overnight. You know, good amount of this inventory has been removed with this break. But gosh, I wish this was taken. I wish this was taken in regular trading hours. Even this low was taken in the overnight. But what followed after the big break? Well, it was very. Like let's take a look at this. Okay, did we have a spike on? No, there wasn't a spike. We have a spike the previous day, but not Thursday. We have an overnight spike here. We have a spike to the lower side, and opening inside the spike for me has always been the hardest times, the most difficult times that I ever had, because it's a neutral. And the thing is, we have a spike that takes the market out of this range, this 3-day range here. Look below and opens inside. Not just inside the range, the 3-day range, but inside previous day range. You know, it could be more neutral than that. And at the opening, what happened at the opening? There were some things here. First, I believe, okay, it was a rally. It started from the opening. They came back and then took this low, then this one out, and stopped just a couple ticks from this low. And boy, this is a level, right? This kind of lows confuse me and many traders, because being a non-excess low, right? But when you put things in context, that could have been a market that has got too short. Inventory is just too short that it cannot go lower anymore. And there has to be some rebalancing, some rally for the market to keep breaking. Inventory was just crazy short from the overnight and from overall. Remember, all time frames are trending lower. If you miss this, the market gave us the first opportunity the market to get in the trend. At the time, I didn't know it was going to be a trending day, but was this high, right? Getting out, look below and failure targets the opposite side of the range, which is this high. But for continuation, there was a lot of things that we have here to monitor for continuation, right? We have overnight POC, we have POC, previous day POC, low closing of the distributions, overnight POC, previous day settle, last, previous day high, 2 days inside day high, overnight high, multiple things, the Forex 300 also, and every single reference was being taken. And once the market takes this high out and doesn't come back, this is the first opportunity that I saw here. I was very hesitant here. I thought the market was going to give us some. It was going to come back to check this single print here, and I will have this is an aberration here, and coming here, opening here, just one tick inside this range. I guess this was on the second period instead of the third period. I guess what have been more odds or more likely that the market can back, repel this, and then that's a long. Okay, once the market takes out the range again, that's a long. No, with the stop right where the low, whatever this low. Usually it's just a couple ticks here. This one, the market never came back to recheck the opening, and boom, keep going high. And by the time, while the market was doing this, you could see very clearly this is short covering. The way, the pace, the tempo, how the market was doing this thing. This is short. This short covering is not just short covering, but short squeeze. The shorts, the trade is the short in the spike here in the overnight, were trapped here and were forced out, with the squeeze. And we're squeezed here. It's a trending day. If the market has a pullback later in the afternoon, we talk about this as well. In the same way, how a market that has very short inventory in the daily time frame, which is this case, right? Was daily, monthly, and weekly, and the intraday as well. It just got too short. It has to rally before it can break. But that's a scenario that can happen. In the intraday, this inventory is really long. It's too long. It's just too long. End of the week. And some rebalancing of that inventory is not unusual. It happens all the time. There's some rebalancing. Traders come back to short the market, and when the market starts going lower, it seems like it's going to start a trend to the side. It just goes back higher. You finally, I got my short working, and the market just reverses and keep going higher because this is a rebalancing of inventory. This sideways trading allows the longs here, to take profits, to hedge, to do some rebalance for them allows the market to do some rebalancing, and then it just resumes its trend. And you could see this coming as well. The odds that this coming at the end when the market just stalls up, he cannot go higher. He cannot go higher here. traders waiting for the last minute, trying to get the last penny of the trade, being forced to liquidate here. And this is also another trap that can happen, another dynamic that happen in the market, that this is just a rebalancing, this is just longs, this could be just longs, closing the positions here. This is some liquidation of the longs here, of the late longs. And the market can keep going higher. I'm not saying that, right? But that's how because we have to put things in context here. And when I was watching this, I was also asking what this market is doing, and where, or what can be the potential direction, the potential destination of that trade. And that took me to the 29th here, which is a really high volume. I guess I posted this on Twitter as well. Look at this volume here, 30s, 10s, 20s. There's a lot of volume here. And look at the profiles here. Look at the histograms here. Really, really kind of ugly histograms. Right? Compare these ones to, for example, to this one, right? It can look smoother. This is very regular fall. This is just, it is the odds that these are short-term, very short-term traders or trading capital is very high here. And for this day also, I was carrying some information here. Look at these highs, for example. No? Can you see how these ones are made? The volume here, this area here. Look at this. Stops here, stops. The way how this trades, right? The potential here, even this one, you have the market going lower here, right? And this late period just close, removes all these stops here, But the way how it does, this is also happens quite often. The same way how this happened here, right? You can see better this in the daily time frame. You can see a bunch of stops here, stops here. The market just, what happened here, this day, this low in the daily, is similar to what happened here, the action in the intraday. Bunch of stops, remove, and then go the opposite direction. Stops, goes, remove the stops, and goes in the opposite direction. Retail call this bull trap, bear trap, whatever, right? Those kind of names that traders use to label the market. When you label something, it's kind of, you're getting biased. And look at the potential of this market also. The potential is for this one is here, and here. And another chart where you can see this. If I use the daily, if I go to the daily, look at what happened here, for example. You can place a trend line here, mechanical trading here. And look at what's happening here as well. You could almost place a trend line here and another one. You have. I hope you have seen this. I was seeing this in real time when the market got to this high jog. Okay, come on, don't tell me you're going to sell from this line. And it just happened. It just happened. Market made this high. It coincided with this high volume area. Now we have this high volume area, but too late in the afternoon. Now I was expecting maybe the market can come back to here or to here, not taking the whole area and then sell. But the way how it did it was really, I was impressed with the market. Just touched, don't even dare to go inside this, and then after that just liquidation followed. I remain neutral in this market. I remain neutral because what I see here, there's a lot of things going on here. Seems to be going on here, but actually, there's a lot of, for example, in the monthly, we have this 13-month range. The market re-entered this range, closed the week, okay? It didn't close a month yet. We still have like 3 more weeks to go before the month ends. As long as the market doesn't take this high out, there is still a trending market to the downside in the monthly time frame. It is right now back again at this area, the 43.50, which was a no-go level a couple weeks ago. In the weekly time frame, we can see these ranges, range up here, range down here, with this level. This level was support. The market used this level as support, and now look what the market is doing. It's using that level as a resistance, and the market is right in between these two ranges. The market didn't even get back inside this range. It just traded in between these two ranges. It's like this is like a distribution, right? 2 distributions in the weekly time frame. If you put all this together, what we will have here, is something like this. In the weekly time frame, the market is right here, came out of this range. It didn't get inside this. Coming back inside, this is a look below. So far, it's a look below this range. The weekly time frame, okay? If this comes back inside, it can target the opposite side of this range, which is this one. And we remember that this is a mechanical level as well. If this has downside continuation because the market is trending lower here, still, unless this high is taken, the market is still trending lower. And if it re-enters this range, the destination could be the lower side of this range. Could be this. Well, we put this together. That's in the weekly time frame. The daily time frame. This is quite interesting. Selling from this eye, this is very mechanical. We got the same thing going here. We talk about that as well. Gap here. And if we extend or zoom out, we got another gap here. Look at what we have below. Can you see here? Can you see this? Hope you can see. You got 1, 2, 3, 4, 5 lows here. These lows here, plus a gap here. Very weak reference. I'm dying from the 40, basically from the 4200 level, very close to the 200 SMA, not to the 42, to the 200 SMA, which is a reference that bigger time frame traders use, bigger time frame or bigger capital use this kind of reference. And notice these lows, okay? What we talk about those? How do we talk about those lows? What happened in the shortest time frames happen in all time frames. It's the same dynamics, right? Look at this. Lows, a bunch of lows. Takes the lows out, and the market keeps going lower. Bunch of lows. The market takes the lows out, and the market reverses here. This is one time frame. This is a bigger time frame, and this one is a bigger time frame. And the market is just a mix of many time frames. Participants here. I am a very short time frame. there are another guys, another traders that are have daily, that use daily. Hedge funds can be daily, weekly, or monthly. Investment capital is monthly or yearly time frame. And we all have different views of the market. We all have different beliefs. We all have different interests. That's why we never know what's going to happen. You never know who's going to prevail. The market is so irrational. It has too many variables. And can be super sensitive to some kind of pieces of information. We have now, for example, the Speaker of the House. We don't have Speaker of the House now, which means that the odds that the budget, the nation budget, is going to be back on the news in about a month. Right now, kind of like there is a lot of uncertainty there. We don't know who the Speaker of the House is going to be, or what his or her policies are going to be. That's one thing. Now, another thing that has happened, a geopolitical thing that has happened, we have this conflict happening in Israel now. We have a Ukrainian, now we have Israel, and there's still a lot of things that happen here, right? We have Iran, we have China, and those are unpredictable things. We never know what's going to happen there, and we never know how the market is going to react to those things. Right? Just a couple of weeks ago, everything was roses, everything was great. The economy has unbelievable good, has unbelievable resilience, is super good. There's not going to be hard landing, no soft landing, there's going to be no landing at all. And in just a couple of weeks, or even less than that, everything changed. Everything was negative. Everything was negative last week. And after the big rally that we have on Friday, I wouldn't be surprised that the talk changes again. Everything is good. We have earnings coming. Everything is going to be good. If this big tech start reporting, start having good earnings, so everything is going to be back to normal. Quote unquote normal, right? So those are the things that get in the way. Block us, I guess, give us a lot of biases and doesn't allow us to focus on what the market is doing. What really matters in trading is this: the amount of contracts that are here. How many? This is what the only thing that matters is this. Not the orders that are waiting in the bid, or the orders that are placed on the ask. Not the iceberg orders or whatever. This is what really matters, because this is real. We can see this. This is real people, real traders, real participants doing their thing. Buying, selling here. This is what matters. All the other thing is just noise. All the talks, numbers, news, whatever you call it. This is just talk. But we have to deal. That's part of trading. That's part of the business as well. Because there is some participants that use that for trading. What is the trend now? What was the trend? What is the trend? Those are concrete pieces of information that we know. The market was trending lower in all time frames. The daily has changed. There is change here. There's an absolutely killer here, right? We have this stops taking out, this one takes taking out, this one taking out, this one taking out as well. All the inventory that was short here has been removed, has been corrected, has been rebalanced. This part has been rebalanced. And now we're back to this day. We have 1, 2, 3 highs only. Let's forget, just if we're going to take a look, for example, the daily, I can very well remove these 4 things, these 4 bars, remove these 3 bars, and put only these 3 together. And that's why I have high here. Non-excess in the low, though, and a mechanical low. I don't have any bias here. I still consider that the market has really short inventory. Some of that was rebalanced on Friday. I think the short-term inventory could be, it's being rebalanced, and there could be some crazy longs from Friday. There could be some rebalancing on Friday, starting next week, because look at this, how thin this market, how many distributions we have, 1, 2, 3, 4 distributions. Very emotional markets, very emotional. These are shorts getting squeezy, screaming, get me out. I want to get out, okay, of this market. And for next week, what do we have next week? What do we have in schedule? What do we have in deck? Just look at this, okay? Let me do this a different way. Something happened here. Cool. Look at this. What do we have? What? No, this is not. This is last week. Yeah, this is it. This is better. All right. We have speaker here, How many speakers? How many 5 speakers? 1, 2, 3, 4, 5, 6 speakers. Last week we have 9. Atlanta Fed. PPI on Wednesday, FOMC on Wednesday, CPI on Thursday. This is the weekly job report at the same time, 8:30. And consumer sentiment Friday. I guess the most important things are this one, and this one. Okay. For Friday, for the upcoming, for this week. Earnings. Another thing that is happening. We have, let me pull this one out as well. Just let me get it for you. Okay. Seasons, earning season is officially kicking this week. We have CD, PNC, BlackRock, Wells Fargo next week. Oh, nice. Now this is a monthly, huh? The week after I have Netflix, Tesla. I like this format better. The week after that, Meta. The week after that, up here. Oh, where's Google here? Oh, no, there's the banks, right? Next week, Bank of America, United, Interactive Brokers here, Schwab, more banks, regions, load of banks, and Tesla next week, Wednesday. Meta, Apple here. Come on, where's Google? Where's Nvidia here? Is that going to be on November? Probably, because I cannot see it here. Let me know if you see those ones. Okay, but the most important thing, the early season, start with banks. Okay, and this thing also, happens over and over. Okay, I'll show you what I'm talking about. Just let me save this screenshot so I can access anytime in the future. We have this big event, jobs. We have a range. No, I guess I will use. We have a range here. We have a range. This range that I started here, the daily time frame. We have this range here. Oh, come on. Okay, there's a lot of things here. We have this range. We have a 3-day range. Where was this? Okay, it was this 3-day range here. Market look below, above, fail, back inside, and when that happened, the destination is the opposite side to the range. The market took that low out, makes a perfect balance day, 3-day balance range, which makes, it makes a 3-day balance range here, what balance guidelines inside of this range, inside of the bigger range now. It's not just 1, 2, 3 day range now. It's 4, 5, 6, 7, 8, 9 range. This is balance inside balance. Not just that, right? This is triple balance here. We have a big range here. Let's pretend that this is not here. But now it is there. We cannot ignore that now. No. We have this big range here. 1, another range here. 2, and then this day inside this day, and these 2 days, and this day inside this other one. So it's balance inside balance inside balance. The odds that if there was a directional move out of that balance, that directional move was going to have extended range or was going to be a big one, were high. Because it's just too much. It's exponentially high here. Exponential, the damage that the market can do when this happens is really high. And the context also we have here, right? We have payrolls, non-farm payrolls coming on Friday. We have a big range here now. What we were talking on Friday was that it's not unusual, right? It's not unusual that the market has this kind of range. When there is this kind of situation, the market is starting something, another cycle, that's what I call it, right? It has a big break, and then before the big news, the news cycle starts, the market comes back. To the center of the range, which is what it is right now, at the center of this range. I'm not saying that I knew that was going to happen. I'm not saying that, but that's just start to monitor. If you haven't noticed that, start to monitor these events. What happened when the market make these ranges? There usually is a break. It could be, in this case, there was a break followed by the immediate rally. So on other times there's this break here, and then comes back to center again. You have this range here, for example, comes back to center and then news. I mean, if you check this, what happened these days, you will find news events over there. It's not unusual. It happens all the time. This kind of short coverings also are part of the cycle. It usually happens, this kind of short squeeze. You will find these ones, the odds that you will find more short squeezes on Fridays, which is end of the week or end of the month, are higher. And if the end of the month coincides with the end of the week as well, with the end of the quarter, it's even higher. It didn't happen, it didn't happen at the end of the previous month. It was this September 29th, I don't know what it was here. Right. It didn't happen, but it happened. It was delayed like 9 days. I'm not saying, that I know what's going to happen, because this rally here, I was expecting, if that can be a word, come on, well, there must be, maybe there's a trade here, out of these two to the center, for example, to the center. Or when I saw this, maybe the market was coming above this range, but the strength, the length, the distance that we have here, I did not expect that. That's something I did not expect. Also, for the magnitude of the rally, it has a huge rally here that took 1, 2, 3, 4, 5 days out. Look at the volume here. It's just, there's nothing out of the ordinary here. Just about around these levels. The past, what we have at the beginning of the week, end of previous week. Just there. It's nothing unusual. I would say this is low. It is higher relative to the previous day, but it's low, which is another indication, right? Again, another indication that the participants of the market here are just short time frame traders here, short time frame capital. Now, into the next week, what do we have? We were talking about this geopolitical situation in Israel. You have a new war on top of the war on Ukraine. We have the Speaker of the House situation. We have now the odds, that the odds that the Fed is going to keep these rates higher for longer, are high, and even the odds of having that the market is going to have maybe 1 or 2 more higher rate hikes have increased as well. But the market may have got too short to keep breaking lower, and this is just a rebalancing in the same situation. The structure on the upper side is very weak. We talk about this as well. This was weak. This was weak. This high is weak. This one, I'll consider this one weak as well, coming from halfback. Look at what this is. Overnight previous day POC. You have a gap here. The high coming from the previous month high. And this extraordinary, very thin market here, double distribution with a non-excess high here, a poor high here. This high is coming from previous day POC all the way to the 46. All this market has a really bad structure. All this break has a really bad structure. And we are still, I am carrying all the information that this market has provided, has given us. This is market generated information from the past. Right? All of this also. Notice what is below this. There's nothing here. Below this micro range, this is only 4-day range here, and the market finds support around this range, which is really incredible. And What do we have below this low? A bunch of stops here. Matching this low on top of that. Nothing here holding the market. Nothing here holding the market. A bunch of stops here. A bunch of lows here gathered together. More lows here together. Nothing here. Nothing here. Nothing all the way down to here. To this level here. To 3,800. This range, to me, this range has a better, it can be used, has a better use, right? The market has more fundamentals here to bounce from this, or to use this level as a support. Sideways trading maybe, because this range is wide, but this is micro tiny. And look the formation here. This is short covering as well. This is short covering. This is short covering. Nothing else. This is short covering that happened here. And use a short covering range as a support. That's just incredible. This one is better, even though this is long liquidation as well. And below this, also nothing here, nothing here, nothing here, nothing all over. Both sides. The upper side, as we seen in the daily market profiles, and the lower side, as we have seen, we are seeing here in the daily bars. And to me, what I try to do is I'm just watching this market one day at a time, trying to be as neutral as I can be, and having a lot of patience, and using the information the market is giving us. Sometimes we as a trader just want to do something right away after the market opens here. After the market opens here, we want to be long, short, and we lose a lot of money here, a lot of efforts. And something else that we don't consider when working these kind of days is we use a lot of mental capital as well, which if we lose that, that's hard to recover from that. We can recover easier from financial losses than mental losses. I don't see any kind of support for this. This can be reversed at any time. This is really bad. This is short cover. Doesn't mean that the market cannot keep going higher. There can be some sideways trading here, but until the open, what happens until the open will give us an idea of what this market can do. Put all the events that are scheduled for the week in your homework as well. And doing the homework is very important. It's very important. We have talked about that as well, that if we need to have an idea or a personal opinion about what's going on, right? Because we can make adjustments if we are wrong. And we're going to be wrong. We're just going to accept. This is, for example, what is this? This is Friday, October 6th. Yeah, this is Friday. I start to write notes what is happening in the market. I was keeping an eye on the bond market at this gigantic spike to the downside that make a low in the 30 years. I got it there. After the market closed, take more notes, what's happening here. The same way I did this, I did a day before and the previous day and the day before that. At the beginning, when you do this, you just don't remember. You may have a plan, and as soon as the market opens, all the plans go out of the window. But the more you do, the more you will retain that information. I got here, for example, what happened on Friday. Right? This multiple distribution noted here. And the high volume area that we talked before when watching this, which is this one over here. Right? The market didn't get to go through this. There's enough supply here to keep feeling a rally here. There's a lot of supply here. But the market needs to take this could be used as a range, as a look above. If the market take this area out, it is one thing. If the market is sold from the center is another thing. There's another things here to monitor. We talk about these charts, the volume. This is my part of my homework. The ranges. Nothing has changed in the monthly, on the weekly. There's change on the daily, though. It's changed on the daily. We are out of this range now. This inside day here, the inside range. And now we have a bigger range of 1, 2, 3, 4, 5, 6, 7, 8, 9 days range, right? You take from this day all the way to here. With the excess, can this be excess? Yeah. Yes, because this when the market made a range here, a 3-day range here, look above and fail. And now, look at where this market is coming, to the higher range, to the higher this range here. So this trade, first this trade is completed to the downside, the other trade to the upside is completed as well. This is something very interesting also that I guess we talked about this on Thursday or Wednesday as well, is that we put all these ranges together. This looks like a truncated market, and like a B shape, right? What Jim calls this a B shape in the bigger time frame, not the intraday, but kind of like a daily. And the thing is truncated in the low side. When it's truncated, we have this, this market is getting just too short. The market gets too short, it cannot break forward. And the events that are coming for the next week. What else? What else do I have here? What else can we talk about? I will be paying special attention also to the opening of the week. 1, 2, 3, 4. This is really, really good. And 1, 2, 3, 4, 5. When the market opened, for example, this day, this week, the previous week, the market opened the previous week, it opened with a big gap. It opened with a big gap. Not a gap. There was a substantial range between the last trade and the opening, okay? And the market was sold. It just sold continuously. But it was very slow. What happened that day, what happened that opening, it was very slow. Let me see if I can do it. I can do it here. Was this day? Yes, this was, It was very slow. Notice where sale is down here. And market open kind of like above here, way up here. It just didn't happen. But the thing, this is the thing, right? It keeps selling very slow, But the important piece of information of this day was that the market closed down here the previous week and opened way up here. Okay, way up there. If this was a weak market, okay, it just don't do that. All right, that little piece of information that was very important, as we see down the road. But the thing is, by the time that piece of information becomes useful, usually we have forgotten about that. If we don't do our homework, we just won't see that. We won't remember that. We just, because even if we do, at least that's my case, right? Even when I do this, I do my homework, quite often, most of the time I forgot what I have right the very next day. So I have to consciously try to remember what I have seen. It is easy to access to that information to those memories, to those records in our brain when we actually do our homework. When we don't do that, it is harder because it's just not there. We think we will remember. When we don't do that, we just have too much. We just have too much information to deal with to remember these things. Now, I won't be surprised about the talks on the news now. Now that this is a good market, blah 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 blah. But just don't pay attention to that. Focus on what is happening, not in what is going to happen or what somebody says is going to happen. This prominent point of control also. Oh boy, what I have done here. This is. Oh, okay. Let's now. What I do after I do my weekend update. This is for me. I put it out there to have, some accountability. If somebody find this useful, I hope it's useful for you or somebody out there. But what I usually do after that is I listen to what Jim Dalton has posted as well. Very interesting because I use him as a benchmark. Okay, let's see what he has to say. Has posted as well. Oh, come on, this is me. This is not. Okay, here is Jim Dalton.
The week ahead. Following Friday's surprise rally, the likelihood is that momentum traders will be out in force along with the seasonal specialists predicting the traditional year-end rally. Our advice is listen to the market or market-generated information to determine if they are right or wrong. The best evidence that we have is that major market participants are overly short. That includes hedge funds as well as CTAs. Short covering can be a powerful force. You could get continuation from Friday with short covering, but remember, if short covering is not joined by new money buying, short covering can actually weaken a market as it removes potential buying power. Last Monday's tempo or pace, along with the same on Tuesday, was signaling the potential laggard short situation. Coming into Friday's monthly employment report, the market was in short-term balance following two back-to-back inside days. The balanced trading guidelines say to go with a breakout from balance. Friday demonstrated that breakout. Additionally, the guidelines say to fade or go against a breakout that fails to show follow-through. The included graphic allows you to see what I call the serious support level. The superior or serious support level is the breakout level from balance. If the market returns to that balance, that is a very negative sign for the market. Positive sign would be for the market to show upward continuation. We've marked what we call minor support level. A strong market would show upside continuation above that minor support level. Our immediate focus in the coming week will be on follow-through or failure. Two upcoming events are likely to be relevant to upside follow-through or failure. The first is CPI on Thursday, followed by earnings season, which begins the following week. Good luck. Expect volatility as the week opens.
What do you think? I love it. This is very, very concise, very a lot of information in just 3 minutes there. Now you can see, you could hear Jim talking about, you know, what day we're October, right? Kind of like midway October. He's talking about what can we expect, you know, from the talking heads, you know, talking about starting to talk about the Santa Claus rally now, end of the week, end of the year rally, you know. Also, and that's something I hope, you know. I guess what I feel good with myself is that those thoughts, you know, I have also started to think, right, you know, about the argument that there could be something here that can be used, right? The market now may have something to talk about, or to fundament, to have any fundament for the Santa Claus rally. The Santa Claus rally is the last week, you know, but the end of the year rally is another thing. And I was looking to this very nice insight, very particular, special range here, this 3-day range, right? This is in range, I mean, balance, inside balance, inside balance. What I haven't, the way how he put it, right? And that's why I like to see him, because it allows me to make some adjustments, to add more things, right, to what I do, because the markets are always repeating. But my longevity in this market, you know, my experience is just short, very short compared to him. He has over 50 years experience, and he has seen way more cycles than I did. I am. Right? And this part, when he calls this a major level, because it's a breakout of this range, right? This balance, very, very nice balance here, and another balance here, right? This area here, he calls like a minor support or something like that. I was using another references here. My reference, for example, I have this 3-day range, right? I have these levels, the 7%, the 10%. Like, this is not that relevant, but the closer is to the 10, the bigger the odds that could be some kind of selling there. Now the market is safe. I think could be considered safer than how it was when the market was taking these lows, for example. I have this pullback low because I see this as an upside movement, and as long as the market keeps or builds value above this level, it can come down here, maybe look below, but builds overall value above this level. It would mean that this movement has potential to keep going to the upside. The way how he frames this is different, which is what I like, right? Because I can incorporate that to my analysis for the next sessions, or to my, add to my toolbar, which uses this as a support, this range, this major range. Let's put him again, so you can see how he calls, what he calls that is Is zero support, minus support, right? That's something. Right? But these are just things, the way the names that he has, could be different than yours. You can name it whatever you want. It just adds more. It adds more. It adds more. Now I can consider this level also. But the levels itself, by itself, is not that relevant. What is relevant is what the market does around those levels. If there is something going, no, doesn't mean that market is going to. If this market buys from here or this is a buying level, I'm going to sell or buy from this level or sell or buy from this level. It's what the market does. And usually we need time. We need more than one period, more than one day to see that. It makes me remember, I believe there was a spike to the upside here in this day. Oh no, I saw a couple of spikes here. I don't remember which day it was, but I saw a spike to the upside, and the market just rejected that spike. I guess it was this day. Nope. What about this? Nope. What about this? Nope. Nah. What's this? I don't remember. I don't know anything. But the thing, okay, this is, for example, this moon. No, this is not. This is nothing here. There is a spike here. Late spike. I don't. I call this a spike because it closes above. It is too late in the afternoon. In the session closes above. But the market. Notice where the market. Where the market opens relative to the spike and where value is. This is a sign of weakness in the market. What happened here? It just rejected the spike right away, and value started being lower. Value here, next day overlapping to lower, and the next day value is just around this, in the same area the day after that. But we need 4 days, for example, to see, the weakness on this market. We have this in the short term, because I am a short time frame trader. And we need that. We need time to do these observations. And most traders are very impatient. I am also very impatient. I really have to fight hard, or at least now I can understand that I need to give time to the market to see, to make this observation, so I can make these observations, right? To say, for example, that this market is, Jim said, taking this level and trading, building value below is a sign of weakness. It's just a really bad sign of weakness. But the weakness we cannot expect. I'm not saying it cannot happen, but we cannot expect that the market is going to break right away. It's just a sign for what is coming after. And that's the other thing also, right? That there is always a lag. There's always a lag between what is happening in this moment and what's bound to happen in the market, with all the market general information we have. Sometimes we can be right, but we are just so impatient. We see tremendous amount of weakness in the lower side and the upper side, and say, no, this market is too weak. This break is no good. This is bad. This is long, and the market just keep breaking. Momentum is a force. Momentum is a force we need to acknowledge. We don't have a bear out there that will, or an alarm that will trigger or hit when the momentum is over. We just don't know. Well, we don't know also when momentum traders will join any kind of movement. The last thing anybody could have done on Friday was short. If you haven't seen what the market was doing, or you were shorting the market, why you were shorting? It was quite obvious after this B period here that this is a short squeeze. How long momentum trading can take that market? That's another question, right? That's another question. It's way more risky here in the center than, for example, it's more riskier to take a long here because there's no reference whatsoever here. Now that I see it, right? And here, for example, right? Or here or here. Now here you have a reference here. If you take a long here, if the market takes this low, you're out. The market could have taken this low out, come back and check it maybe 2 ticks and keep going and reverse to the upside and do the same thing that market did. But this trade takes you out and just doesn't out. And unfortunately, if we trade futures in this volatility, that can happen. Maybe options can be a little bit better, gives you more room, but sometimes we just, the market, we think that this can happen and the market just keep going lower and lower and lower and lower and lower. Don't expect the same dynamics that we have on Friday repeat on Monday. I'm not saying it cannot happen, but it's not usual. The odds of that can happen, and they happen the same way. We have we have different kind of information now. We have this low, for example, or you can take this level as well, as Jim said. This is the range. This we are going to call this 3-day range high, for example. Right? You can call that. This is I have this level as a weak level. For me, they're good also. The market will come back and check this level out because this buying coming very close from what I saw this day. But when I saw this action on Friday, it tells me that could be some more the market comes back to this. If it's going to have downside extension, now there's a tremendous amount of weakness, very thin market as well. There's tremendous amount of supply here too. I am watching, but can you see what kind of trader Jim is? JJ is another kind of trader. Peter Reisnick is another kind of trader, and you are another kind of trader, and I am another kind of trader. But we got to know what kind of traders we are. That will increase our odds of success, right? And we can hear another people talk. We can hear another people's opinion, and decide, right? Once we have our own opinion, decide, okay, this is something that this is something that I didn't see. Okay, I don't use this one, and this is irrelevant for me, or this is very important to me, and we just can trim or add more information to our view of the market. Okay, I guess what Jim said resumes better, in such a short period of time, just 3 minutes. It says better. He explains better than I do. I understand he's a different kind of trader than I am. He's my mentor. He was my mentor. And I couldn't be more thankful. Okay, I think that's it for today. I wish you a good. I hope this helps. If you have any questions, please just let me know. I usually post. I usually do some posting here. Come on, where's my profile? Is this? Oh, here. You can write me here, or you can write me to to the chat as well if you have any questions or comments. As I say, I hope it helps, and I wish you a good trading week. See you guys. Stay safe. Enjoy the rest of the weekend.